Hello, as we like to do every week, we like to take a look at the past week's market activity, and then, of course, bounce around the market and look for something to trade. Well, I sound like a broken record, I know. It was a bit of a wild ride for a few days, but in the end, by Friday, you can see it basically pop back up, and we're essentially at all-time highs. I always start out here looking at the SPY. For those that aren't familiar with that, that's the ETF, Exchange Traded Fund for the S&P 500, which is essentially the market. It's the entire S&P 500 lumped into one stock. This is what we use to look at the market as a whole. And you can see essentially it's been going up for like 6 months now, straight up. And because it's been going straight up, volatility is very low. So we're volatility based traders. We love to sell volatility when it's high. When it's really cheap like this, we tend to buy it, but I prefer to sell volatility as a whole. So I'm always looking to sell first. If there's no other way to do it, then I'll go into the buy version of things. Anyways, this is S&P 500. The Nasdaq is going to look almost exactly the same, again at all-time highs pretty much, a little bit below the S&P 500, but essentially same story. And the Russell, which is the small cap stocks, finally has gotten up to its all-time highs. So this one has been lagging behind for the last few months, and now it seems to be shooting ahead. But again, just like in all the indices, volatility has been dropping for months. So if I look at the VIX, which is the volatility index, actually I'll go to this one so there's not too much stuff on it. The VIX, you can see this thing has been in kind of taking a beating for months. So if we're looking for high volatility, we really got to look hard around the market. So what did we find today? Well, there is a stock called ETHA, and what this is Ethereum, which is a cryptocurrency if you're not familiar with it. And crypto's been on a kind of a wild ride for a while now. You can see this thing's been shooting way up, and for whatever reason on Friday had a humongous move up, which made the volatility spike. Look at that, IV rank of 93. There is really nothing around the market anywhere close to this one. So what am I going to do? Well, I'm a contrarian trader, which means I tend to bet against trends. If you were a trend trader, you'd want to obviously assume this is going to keep going up. But as a contrarian, my belief is that over time, it will bounce around for a while, but over the next 40-ish days or so, I think it's going to top off somewhere and probably start to head down a bit. Totally my assumption. Again, nobody knows the future, but that's the assumption. You have to start somewhere. You always start your trade by making an assumption. Do you think it's going to go up? Do you think it's going to go down? Or do you think it's going to stay in a range? And for me, with volatility high, and this at all-time highs with this huge move, my assumption again is it's going to start to go down over the next few weeks. And with that assumption, volatility high, that means I'm going to sell a call vertical, which is what I think it's going to do, which means I believe it's going to start going down. So if I go to a trade page, I'm going to go right here to 54 days because this particular stock is not the most liquid, and it's always more liquid in the monthly expiration cycles than the weeklies. So even though this is 39 days tomorrow and this is 53, I'm going to go with this one because it's more liquid, like I said, and liquidity is key in trading. So if I open this up, what am I looking to do? Well, if a call vertical, I'm looking to sell a call above the stock price, and I want it to stay below that number, and I still want to collect my 33 to 40 cents per dollar width. So I've already kind of done the homework on this one, and if I sell a 38.39 vertical, you can see that's 42 cents. Actually, let's try the 39.40 and see what comes up. Perfect. And this is a good lesson as well. So this is as simple as trading gets once you know the rules. Remember, I'm looking to 33 to 40 cents per dollar width of strikes. Here's a dollar width. This is at 35 cents. When I went to 38, you can see it was at 42 cents. And the rules are the rules. When it comes to selling verticals, we stay in this window. Why? Because that gives us a probability of profit, a POP of around the 60 to 70 range, which is where we want to be when we sell verticals. So that's why we stick to the selling verticals rules like stone. I never adjust these myself at all. If I'm collecting 41 cents, I don't want that one. It's too high. I go further away, which means my probability of profit goes up because I'm going further away from the stock now, and that fits my window. So if you see 39 call, as long as it stays below 39 in the next 54 days, I'll make some money. And if we go here, you can see 39 is way up here, right? So that's why my probability of profit is high, because it's only at 37 now. In the next 54 days, if it stays below 39, I will make money on this trade. So we'll go back to the trade page. 39.40 vertical. Again, we're selling the 39, we're buying the 40. We're looking to collect 33 to 40 cents for this trade. So tomorrow, assuming everything stays the same, in ETHA, we're going to look to sell the 39 call, buy the 40 call, and collect 33 to 40 cents. If things move, as you saw me play with the strikes there, all you're going to do is go up or down until this credit says 33 to 40 cents, and then you know you've made the trade correctly. And that's why I love these rules. No thinking involved. You just go until it fits those windows, and if it fits the 33 to 40 cents for dollar width, then you've made this trade correctly. So that's our trade in ETHA. We're selling a call vertical in the 54 day, which would be 53 tomorrow. In ETHA, selling a call vertical because our assumption is it will start to go down over time. That's our trade for Monday. I am excited to let you know I've completed a book that is now available to everyone that wants to get it, called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero, as far as knowing absolutely nothing about options, all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being, what is an option? You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals, and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.